Welcome back inside the Now Morning Show. Now, I told you guys this morning we'll be chatting a little bit about money, about how you can raise some capital using the Trinidad and Tobago Stock Exchange. And this morning, I want to welcome the CEO of the TNT Stock Exchange, Eva Mitchell. Good morning.
Good morning. How are you?
I'm good. How are you?
Good.
All right. So what is the stock exchange exactly? Because oftentimes people are confused about, they hear stock exchange, they see it in movies, but what is it exactly?
So a stock exchange facilitates two types of markets: the primary market and the secondary market, and I explain both of them. So the primary market is where companies, or what we call issuers, sell their shares and investors buy the shares.
Right.
And this is done through what we call an initial public offering. So you would have remembered the FCB IPO,
right.
NGL IPO, and most recently the NIF IPO.
Yes.
And then FCB had an APO, which is an additional public offering last year.
Okay.
Right? And it is a place where, like I say, companies and investors come together. The companies sell their shares, the investors buy their shares for the first time. This is called the primary market, and the stock exchange facilitates that.
Right.
As a matter of fact, the government would have used the stock market, and over the last, let's say, 10 years, would have raised at least $10 billion on the stock market, right? Now, after the shares are listed, we move into the secondary market.
Right.
And secondary market is where you or me, as the investor, who is now invested in a particular company, could now trade those shares amongst ourselves, right?
Okay.
So we facilitate the primary market through the IPO process, the
Right.
initial public offering process, and then we facilitate the trading of shares, that is after the IPO process, amongst investors. So you may want to ask...
Well, I mean, I have plenty of questions I want to ask at this point.
Okay.
Because, I mean, I just want to be clear on, for example, how do I determine how many stocks are available, how many shares are available for my company if I'm going to be listed as an IPO? How is that determined?
Well, first of all, you align yourself with a financial consultant,
Right.
and the financial consultant will do the technical analysis, the due diligence that is needed, and say, okay, they'll make a recommendation to you as a company and say, okay, you list X amount of shares,
Right.
offer X amount of shares, and you offer it at whatever price. So that consultant is going to assist you in valuing your company.
Okay.
So if it's $10, if it's $100, they are going to assist. There are some conditions that you, the company, must meet before you list on the exchange. For example, right now, you have to list a certain percentage of your company or offer a certain percentage of your company so that investors are able to participate in a fair and a transparent way, and that you ensure that there is trading in your company. So you don't want to list too little and trading doesn't happen.
Right.
Therefore, the market becomes illiquid, your shares become illiquid, and you don't realize the full value of your company. When shares trade a lot, so when
As
there's
when the value of the company goes up.
Exactly.
Okay.
So there are some conditions that you'll have to meet as a company in terms of the amount of shares that are listed, but the basis behind it, or the objective behind it, is that you list sufficient enough that you are able to offer sufficient public float, and trading can happen in the most easy, fair, and transparent way.
Okay.
But I wanted to go back to we were talking about what the stock exchange does, and it's important for me to say, yes, we facilitate the buying and selling of shares and trading in the primary and secondary market. Trading in the secondary market. But I want to make the point that this is done in a very fair, transparent, and regulated manner.
The trading, you mean?
Exactly.
Right.
So it's not willy-nilly,
Right.
right? So orders are. So let's say you're participating in an IPO. Let's say you participated in the first IPO, so I'm just drawing on an example. And you're saying, okay, I want to buy more. How does this happen? So what you do, you can do it in two ways. You can do it through a broker. You call up a broker and say, I want to buy more shares. Or you can sign on for our online trading platform. That way you could do it via your mobile device.
Also, you can do the trading yourself. I thought you always had to have a broker.
Well, you must have a brokerage account, and we could get to that later.
Okay.
But you can trade via any mobile device. Now, trading happens 5 days a week. We start at 9:30. The market starts at 9:30. It ends at 12. So you have that window, right, to trade. When you trade, the transfer takes about 2 days, right? 3 days before it's settled. Right now we're moving to 2 days, and 2 days brings us in line with international standards. And what that also means is that instead of you waiting 3 days for you to get your shares or
Yeah.
3 days to get your cash. If you sold your shares, you can now get it in 2 days, and that means if it is that you want to buy more, you can buy more. If it
Right.
is that you want to sell more, you can sell more, and that turnover happens quickly and in line with international standards. The orders are also done in a very electronic, transparent way. It's driven by an order book. So you send in your order electronically. Again, it's not done in a willy-nilly fashion. It's matched based on the price of your order, and it's also matched based on the time. So it's done in a very transparent electronic manner. When your trade happens or when the match happens, you are alerted. You are alerted if it is that you have our online trading platform, so you know exactly when it happens.
When you say a match happens, so it's like I want to buy your shares.
And you want to buy my shares and I am selling it to you.
Right.
Match happens.
Okay. So if you say you're not interested in selling, do I then have to find somebody else, or does the system do that for me?
So it's an order book.
Right.
So it will list all the sells and it will list all the buys.
Okay.
So once you come in at the right price and your price converge with another price, it matches electronically. So it's not okay. 20 years ago, what happens is that we used to have brokers in a room
shouting at each other.
And they shout at each other, and you have a chalk and you mark off it. It's not like that.
Right.
It was pretty much manual. Now it's very much electronic,
okay.
and it's very fair. It's very transparent.
All right. So if I want to invest in the stock market, we spoke about how to get to trade. We spoke
Right.
about how to get to the IPO situation from a business perspective. But from an investor perspective, what do I need to register to sign up?
Right. So first of all, you have to open a brokerage account, and you have to do so with a licensed broker.
Right.
We have about 8 licensed brokers in the market. Most, if not all, of our major banks have a brokerage arm.
Okay.
So FCB, Republic Bank, GMMB, NCB, RBC, right? They all have brokerage arms. And then we have independent brokers who are not aligned to a bank. We have Boss Brokers, Shepherd Securities, Caribbean Stock Brokers,
Okay.
right? So you could go to any of these licensed brokers, and I want to stress on license. Go to any, because that means you are protected. You have some recourse in the
Okay.
event of any unforeseen event,
Circumstances, right.
So you go and you open up an account. Of course, you're going to ask, well, what do I need to open up an account?
yeah.
Now, to open up a brokerage account is similar to open up a bank account. So you would have to go through some KYC process. You'll have to work with your ID, utility bill.
Firstborn child, the usual.
Yeah, exactly. So, I mean, it's pretty much standard across the board. But I think and sometimes the process for one broker could be lengthier than the other. So
one, right.
my recommendation is that you call ahead. But the important thing to understand is that when you do open up this account, more than likely the broker that you choose, right, is going to align you with a financial advisor, and that financial advisor is going to do what they call a risk assessment, determine your risk profile, and then make suitable recommendations
For you to invest.
So again, it's not done in a willy-nilly way.
Right.
And then you may ask, well, how much is it to open up how much money do I need to invest?
Well, I feel like you can call the broker and find out that
Exactly,
information.
yes,
I want to get into, before we wrap up, the SME market in terms of getting funds for your business if you want to raise capital and stuff like that. Is that you just go through the IPO process, or is it, what is it? Is it
No, first of all, you have to register yourself you have to register with the SEC. You're registered as a reporting issuer. But let me just back up and give you some history. So our SME market was open in 2012, and the purpose of the market is so that small businesses can use this market to raise funds and raise capital to inject into the company to support the growth of the business. Now, we have a lot of great benefits on the SME market that SMEs can enjoy. One being the tax incentive. It's a full 10-year tax incentive period where you pay 0% tax for the first 5 years.
Nice.
And that's 0% on top line taxes and bottom line taxes.
Okay.
And also for the second 5 years, you pay 50% of whatever the prevailing rate is. Now, in the context of a rising interest rate environment, which we are seeing now, and in the context of using equity financing as a means to grow your business, especially when, for smaller business, cash flows are really ebb and flow. So in challenging economic and financial times, you may not be able to meet your debt obligations with the bank.
Yeah.
If you list on the SME market, you don't have that. You don't have to actually pay a monthly installment,
at
right?
the bank.
No, like at the bank, if you have a loan, you have the monthly. So when you list on the exchange, you don't have that. So you actually raise capital. Investors invest in your company, you share your profits with them via dividends, and you also have the opportunity to go back to the market and raise additional capital without giving up the majority control of your business.
And I think that's the important point that we needed to get out this morning. I mean, I feel like we could continue talking about this for another half an hour easy.
Anytime.
But unfortunately, we are out of time for today. But I hope that you can come back and we can get into it a little bit
more.
You
just let me know. I'll be here.
Yes, ma'am.
Thank
you so much for joining us this morning.
All right.
Yvonne Mitchell, the CEO of the TNT Stock Exchange, just giving us some tips into getting into the stock market, into investing, as well as putting up your SME, putting up your business on the stock exchange as well. We take a quick break and come back with more inside the Now Morning Show. Stay tuned.